Hi everyone, happy weekend. Hope everyone's doing well. I wanted to do a quick video just giving a little bit more details on the last live commentary trade that I did on Nasdaq on Thursday. Hopefully maybe it'll give some more clarity to some of you. So first thing you need to understand is that I've been since the way I trade is just based on my own experience. Sometimes like you might see certain things that don't make much sense to you right now simply because you are only exposed to the ICT YouTube content recently and you don't have the experience of seeing the things that I see on the charts, right? I've been trading for 5 years and now pretty much, well, over 2 years studying ICT. So I know based from my experience, certain like price patterns, they just getting ingrained in my subconscious mind. So when I see something similar, I know that this is okay. I've seen it so many times. This is most likely, a trade where I can pull a trigger on. So the Nasdaq loan that I got on here, right? Let's go into more details. So the idea is, again, don't be discouraged if you don't understand everything I'm showing. I don't suppose you will, especially again if you're new. But for people who have been trading ICT style for a few years, I'm pretty sure a lot of the things that I mentioned, it would make sense for them, okay? So we had the imbalance on the hourly chart, right? When I said I started looking for loans here, this imbalance was below this pool of liquidity, sell-side liquidity, a very strong pool of liquidity because it happened across. Again, it's all about time and price. It happened across multiple hours, right? It happened across Asia and basically London sessions. So a lot of hours just consolidating, building the sell side liquidity pool. And we have the first imbalance, hourly imbalance here. So it's a strong area where potentially if we've taken sell side and there's imbalance right close to it, there's a chance that price will react. A lot of times you'll see the price will react in those areas, in those imbalances, either for a complete reversal or for just a retracement to go lower again. But either way, you can usually on lower time frames you can frame a setup and capitalize on it. Okay, so the idea was, again, sell side liquidity imbalance, strong area where you can look for potential setups. And on the 15-minute chart, we have this candle, right? This is your order block. So you can see price went through just a little bit below it, but the body of this candle closed right inside this candle. So that was important to me. I think I did. Yeah, I forgot to mention it in the video. So now let's go to SMT. Again, if you've been only exposed to ICT teachings recently, you know what SMT is. It's like something like that. Let's say it's a difference, crack, and correlation on swing highs across some time. So let's say this Thursday and Friday, this was clear. SMT was S&P, right? We had higher high on Nasdaq on Friday before the NFP drop, and we had the lower high at the same time on S&P. So that's your SMT divergence as ICT teaches it, right? And then price, of course, went lower, and Nasdaq was the weaker one. So ICT teaches you to short the weaker index, or the opposite. If it made a higher high, you would go in on a stronger index. All right. So that's how most people understand ICT. SMT. Okay, so let me remove this. Me, however, I look at other things that also are more subtle, especially since I'm a scalper on the 1-minute chart. Some people were arguing that the things I mentioned were not SMT, or this was just random, this was, noise. It's not noise. Again, I've seen this so many times, and later price action actually confirmed that this in fact was significant. So I pointed out these lows, right? This was a swing low, this one wasn't. But we are in a time of a day when I'm looking for, this is a good area to look for setups, 10 around like anywhere between like, yeah, 10 before basically, you know, 11:30. So this was all a bunch of consolidation. And if you compare S&P, what was it? If you compare S&P, that's what I showed, right? The same candle did not go lower. So it literally was just equal lows. So I saw some people mentioning, oh, that's not SMT, you know, you don't know what you're talking about. Well, you simply haven't been exposed to the amount of, most people haven't been exposed to the amount of time on the charts that I have. Again, this is very important to me. This is not exactly SMT as ICT teaches it, but in a way it's a cracking correlation, just on a smaller time frame, just between a few candles. This is important to me because we are in a consolidation, and you just can go back and backtest when you see price consolidating in a small range and compare two indices, Nasdaq and S&P. Compare if, you know, there's a difference on like high highs, lower lows. See if the trade eventually plays out or not, because to me this is what I was looking for, coupled with everything that I shared with you, all the other reasons, right? The imbalance, 1 hour imbalance, 15-minute order block, sell side liquidity taken. So this was my entry, basically here somewhere, right? Stop was below here. I was aiming originally first above this highs, and this is what this trade really depends on the kind of trader you are, right? This was a good trade. I mean, eventually, look, the trade did hit my objectives, but it would take what it took a whole, basically a little bit more than an hour to hit my objective. Me personally, I am a short-term trader. Most of my trades are under half an hour long, right? So I don't like holding trades for too long unless it's just a momentum trade and it keeps going. There's literally very little retracements. Price is already much higher. I can leave a small partial and let it run, you know. But most of my trades, yeah, are under half an hour long. So you already seen the video, hopefully, so you know that I closed here for about, instead of going for a 2.5 hour somewhere here, at first I adjusted to 2 hour. Well, I guess my entry was higher. What was it? Somewhere here for 2 hour. Anyway, it almost came close, didn't give me that, so eventually I closed around here, and if I did, my stop loss was already at break even, and I made the right call. Otherwise I would have been stopped out with nothing, right? So at least this was a win that was smaller than I originally anticipated. But if, let's say, if I didn't move my stop, I would just have this drawdown, another drawdown, and then finally hit my objective. But so it really depends on the type of trader you are. If you're more of a intraday trader, you can hold trades for a few hours, nothing wrong. This was a good trade, right? Absolutely played out. And right before 12, right before noon, it literally hit your objective. So that's good, right? But we were already kind of, like I mentioned, at the end, late AM session, 11 o'clock, so I didn't want to be, it's time and price, right? I did not want to be in this trade any longer. This is where, and you could have entered again maybe here. Also, this is actually, if you look at it, this was your inception model entry, overlapping gaps. You have a 5-minute imbalance here. Look, one here. Obviously, it's in a premium. I mean, discount. From this high to this low, you can see below 50%. So it's valid. And we had another gap here. Right? So we have two overlapping gaps, 5-minute gap, 1-minute gap. Price came back here. You could have entered absolutely here long also, let's say somewhere here. Your stop would be slightly below this low here. You would just have this drawdown, never hit your stop. This was a nice and easy trade also, but I personally, well, it depends really. It depends how I feel about the market. This happened at 11:30, so very close to lunchtime. And when I was already in this trade, and it was Thursday before NFP, so price action can be a little bit funky too, right? It's not our regular week, so I did not want to engage. Again, beautiful trade, delivered absolutely above these highs, but I did not want to engage, so I left it. So it's up to you as a trader when you see a setup that to decide if you want to, let's say there's a setup based on your model, which in this case, this was the inception model, worked out well, right? Target buy side liquidity, now have a relative equal highs here, so of course it's going to draw towards those. But the time is not the best. If this was, let's say, 10:30, I would definitely take it. But the time of day, day of the week, and during NFP week, all of those factors, they have to be incorporated in your decision of taking the trade or not, right? And if you look at, and the type, it again depends on the type of trader you are. If you did enter somehow here and you waited for like an hour to hit your objective, great trade. If you didn't move your stop after this, perfect. Me, I just like to, be in and out quickly and look for other opportunities. But I didn't, this was actually my last trade for the week. I did not trade anything else. So going back to this controversial SMT, why was this significant? Like I mentioned, I closed the trade. I did not like how we were consolidating here because S&P was already, S&P eventually did go above these highs, right? When Nasdaq was basically inside this candle. So we did hit this objective. And this basically confirms that because S&P failed to make a lower low here, this is a stronger index. So in hindsight now, I realize, yeah, I could have really, the better trade would be on S&P because it was stronger, right? It was a stronger pair. So it delivered. It makes sense that it went above those highs that I wanted for Nasdaq. And eventually price, did it go higher? Yeah, it did go a little bit higher, but regardless. So it delivered right away. So this confirms that what I was saying about these lows are valid. It was a stronger index. It failed to make a lower low. It delivered. But again, I don't follow every rule that ICT has, right? But one of the rules that I definitely follow is try not to trade close to or at lunch hour time from 12 to 1 Eastern time. That's very important. Yes. So many times I'll get burned, so I stopped. That's definitely, that's a rule that definitely works for me. But when it comes to SMT, I actually like, if you've seen some of my videos also, I like to short the opposite, let's say, or go long. It's easier for me to show on a short objective. Let me see. That's just how my brain works. So let's say, so this was our SMT on Friday, and if you were shorting this, let's say, right? If you were shorting this, you would short S&P based on how ICT teaches it, and it makes perfect sense. Yes, because it was a weaker index, so it's more likely to drop more. But me personally, I like to actually short the stronger index simply because the stronger index is in a much deeper premium. So I like to it usually gives you kind of a delayed reaction to the downside. So if you enter earlier, you can get your also objective hit regardless. You just enter at a much better price than at S&P. That's how I see it, okay? That's my personal opinion about it. That's how I've been using it. So in this case, in a lot of cases, it serves me great. But in this case, when I was longing this, apparently, the S&P was the better trade. It delivered faster than Nasdaq. So this was the idea, okay? Hopefully you understand where I'm coming from. Again, don't get discouraged if you don't understand everything. I'm trying to just show you different ways how I trade. and a lot of your questions can simply be answered by backtesting, right? Or watching some of my previous content, or simply eventually with time, when you get enough experience under your belt, you'll see the things that I'm talking about, they will make sense to you. Or maybe not. Maybe, again, you will find a completely different way of trading, and that's great. There are so many different ways to trade. That's the beauty of ICT concepts, right? So hopefully you get the idea behind this trade a little bit better. What else? Yeah, so that's pretty much what I wanted to talk about. SMT and this stuff. So let me know if you find this useful. I hope it is. And until I talk to you next time, okay? Take care.